Hi there, traders. This is Brad Gilbert with today's trading action. All right, now, as I mentioned yesterday, there's a few things out over the weekend regarding the French election. You got dollar yen hitting 38-year highs, and throw on top of that a little bit of weakness in the ISM manufacturing data as well. So you got a few factors here that you need to factor into the market, or let the market sort of factor them in, because otherwise it's very hard to see exactly what's going on. And this is a good example of a bit of a chop suey situation, right? So the dollar index pretty much chopped up with like news that's pulling it one way and pushing it the other. But what you end up with is similar trend lines to what we had before, but a market that sort of just moved around a bit. Now, euro, well, was up after the French election. It's drifted back down. Now, there's a couple of different things, and these are tricky market conditions in the sense that trying to work out what is going on. Now, if I come into the markets here, and if you are one of those people that sort of look at detail, the long-dated US Treasuries have really gone up. It's gone up from like 4.4 to 4.63% the 30 years, right? 20 years are up, etc. So there's a bit of a positive dollar impact there with regards to the long-dated interest rates, right? So looking at the equity markets, okay, and this is the funny part. Like you'd think with that movement in the bonds, right, higher interest rates, equities would come off, but they haven't, right? So we're seeing higher equity markets. We're not seeing a natural move across the currency pair, so there's no clear risk on, risk off sentiment. We are seeing higher yields, right, over here now. Some are saying this is to do with dollar yen and the risk of intervention. There's a whole range of different things sort of going on. So you just need to be a little bit patient, take a step back and work out what is really going on. Now, the key aspect is, and I mentioned this yesterday, the ISM manufacturing numbers a month or two ago did really sort of come in and start to move the dollar around. We are seeing that now. The consensus was 49.1, came out slightly weaker, right? So that's another piece of the puzzle. We had CPI weaker, PCE price index weaker. We've got the ISM manufacturing numbers weaker. So the numbers in the US are rolling over, but there's a few geopolitical situations which are going to muddle things a bit, right? This French election, it could have a snowball effect across Europe. We'll have to wait and see, but that's the sort of the picture they're painting at the moment. Now, coming into today's trading, this is a good time for the employment and inflation numbers to come out in Europe, right? I'll be covering this in a live session. Now, the likelihood of an opportunity here, it is reasonably small, but I tell you what, now that euro is moving around, this is a nice layer of a macro fundamental to put on top, and we might start to see some movement if there's some decent variance in the numbers there. Outside of that, the S&P Global Manufacturing PMI out of Canada, maybe. I should have mentioned there, the ECB, there's a forum on central banking, right? That'd bore you to tears, but Christine Lagarde is speaking, so you want to pay attention to that. Later in the day, we've got Fed Chairman Jerome Powell speaking, and then there's not so much more coming out, right? So really, the day belongs to Europe in my eyes, okay? Euro in particular with those inflation numbers. Now, just coming back to the technical setup, if you're looking for sort of opportunities here, you're going to have to dig a little bit deeper into the euro because, as you can see, it's like we're getting these false starts. We are above that previous resistance line, but it doesn't tell us too much else about what's going on. So when you start to look at the markets here, make sure you are looking at the euro crosses, because that's where the diamonds are going to find. Well, that's where they're going to be. As I used to say, the diamonds in the rough, right? Go have a look, and more often than not, you'll find something that does have a great setup. Now, Aussie, I would suggest you look at the instruments that do have a higher yield. If I can just get these charts to come up. Now, the RBA is on hold for an extended period of time. That tells me that you would be buying Aussie against most other major currency pairs. At the moment, it's like Euro Aussie is sort of sitting fair value. So I think there's a chance here. We get weaker Euro numbers. It fits in nicely with the overall interest rate differential, and we should see Euro Aussie correct to the downside again, probably hitting these lows. That's the sort of trade I'll be looking for. And why I'm looking at that is it's like a low risk, right? Interest rate differentials are the driving force of currency value. So if we see euro weakness in the inflation numbers, we've already got strength in the Aussie sort of inflation side or interest rate side, and that's a nice, easy trade to the downside. So just check through your charts. That's probably the best one on offer at the moment. You start to get into the euro itself. Well, as I showed you before, it's sort of neither here nor there, and there's different things pulling the dollar around, right? So, and as I was saying, like this comes back to when you're looking at the treasuries, right? This is the driving force at the moment, but it's not connecting with some of the other financial markets. It's not sort of connecting with the equity markets. And you know what? Is the dollar going up? Well, it's a bit mixed, a bit of a mixed bag across the board. So just be careful. At the moment, the weekend news is still factoring in to what is happening. Just focus on the news that is coming out. And if I just get up trading economics, you can actually piece it together. Inflation and employment out of Europe. That's going to be the key to it today. All right, guys, have a good one. All the best. Cheerio.